Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. This is the weekend edition where we interview notable people from the world of real estate investing. Today's no exception. We have a great guest, but first, a quick thank you to our sponsor. The Real Estate Espresso Podcast is brought to you by International Coffee Farms. International Coffee Farms grows and sells specialty coffee in Boquete, Panama. They now have 11 fully operational coffee farms, and they are 100% sold out. They are accepting reservations for farm number 12. If the idea of owning a safe, diversified offshore investment is intriguing to you, check out International Coffee Farms at internationalcoffeefarms.com. That's internationalcoffeefarms.com. We are back. Here on the weekend edition, we interview notable people from the world of real estate investing. Today's no exception. We have a great guest all the way from Houston, Texas. Welcome to the show, Keith Baker.
Thank you, Victor. Thanks for having me.
So, Keith, you're a lender, you're an investor, and you're also the host of the Private Lender Podcast. Give us a little bit of your backstory and how you got into this crazy world.
Fell into it. Like most of us, I was a hustler, worked on houses through high school and college, ended up with a degree in philosophy and German, which meant that I was unemployable. So I went into construction, learned that many aspects of construction. When the timing was right in the oil field, I jumped over, and the oil field took me out of the construction bit. So when I came back into the office and I was home more often, I decided to pursue real estate. And because I have a day job that I like and can't always go run around and meet contractors, I've kind of gravitated to private lending because I'm still involved. I'm still investing. It's still a bit of creative energy for me, and it's a nice fit for what I like to do.
Well, that's awesome. That's awesome. So talk a little bit about the types of projects. What's the sweet spot for you today?
I like short loan fix and flips, 6-month loans where I can get some points, and I'm not so much concerned about the interest rate, but to get some cash flow and coming in to build my reserves to get into bigger and better projects. However, the smaller the length of time, the more I have to work it. So I also do a lot of for seller financing. I'll provide money for people who want to buy a home, and then offer seller financing and wrap my mortgage. So I'll do some of that as well. And I'm probably about 50-50 on straight up private lending for rehabbers, fix and flips, and 50% on the seller finance side, which those are, usually I tend to require a 3-year commitment to have my money work for 3 years so I don't have to put it back to work.
The world of private lending is one where, especially for folks that are new and looking to get into that world, they simply look at the interest rate, the premium that they can get, and they, plug the numbers into an Excel spreadsheet, pat themselves on the back, and think life is good. Obviously, you've been at this a little while. Talk a little bit about how you vet your borrowers, because at the end of the day, a lender only asks one question. If I lend you money, how am I getting it back? That's really the only question. And you probably have very creative ways of asking that question, but that's really the only question. So the risk always is what percentage of deals go bad and how you manage that.
It's a good question. And I like to tell people the most important thing in private lending is ROI, and that is the return of the investment. Like you said, how do I get my money back? That's my number one question. And really the biggest safety net for that is the loan to value. Never give somebody more money than what the property is worth. So you want them buying it distressed. You want to escrow the repairs so that you don't give somebody, say, $70,000 and then something goes wrong, and then the best you can do is recover $65,000. So I hold back repairs and then close at a title company, which also brings in title insurance, property insurance, and other mechanisms that are in place such that if the bottom falls out of the market or this investor gets hit by a bus, insurance policies and contracts and paperwork are what's the primary silver bullet, so to speak, in protecting my money.
Right. So asset value, making sure you have a conservative loan to cost ratio. Are you managing draws during the renovation process, or are you simply holding back until it's completed?
It depends on the project, but most of the time if somebody wants to do a rehab, I hold the funds in escrow, and only after we'll set up a draw schedule. And when certain milestones are completed and an independent inspector goes by and verifies that, then we'll reimburse for the next draw.
Right. So they have to fund the float for between draws. That's not something you're funding.
Correct. Now there are now that is for people I don't know well. I started investing with very successful people here in the Houston area and being their lender. So, for example, my first commercial loan was not intended to be a commercial loan. It just so, hey, we went to a house. I didn't like it. You just needed to tear it down. I didn't see where anybody could sell or finance it. And he said, well, hey, look, there's a little strip center around the corner. You want to go take a look at it? And next thing, and I told him, no, I'm not interested in commercial. I do residential. And well, the rest is history. Now I consider residential as well. I'm sorry, commercial as well.
In the world of residential, you have one of the most liquid assets that you can find. And in particular, if you're in the segment of the market where there's the greatest demand, that's, below that $250,000 price point, where the buyer will potentially qualify for an agency loan, an FHA 203B or something like that. That's one of the best things to get into from a liquidity standpoint. But then, like you said, you're dealing with small projects. If you're looking to scale up your business, how do you do that? Because at the end of the day, if you're investing in those entry-level homes, puts a little bit of a cap on your business, because the paperwork from your point of view is the same. Doesn't matter whether it's a $200,000 loan, a $2 million or $20 million loan. Paperwork's almost the same. How do you scale up from there, or do you even want to scale up?
It's a great question, and I was fortunate. I've been lucky enough to find some really good mentors through my career. And once I started private lending, once everyone found out, I'd go to a RIA meeting. Oh, he's a private lender. I was tapped out within 20 seconds. I mean, everybody wanted, this project, that project. So when it came to scaling up, like I said, that first commercial was just dumb luck. I'm not accredited, really didn't have any money. I had an old 401k that I was lending out of at the time. However, the investor got the property super cheap. He paid $70,000 on a property that appraised as is at $300,000. So even if he lost and he's messed up, and I told him when after we closed, I said, look, you cannot pay me a dime and I will still loan to you because I can take this property back and make a tremendous amount of money. Of course, he's a savvy investor. He's done quite well. He refied me out, owner financed it or seller financed it. And then the poor lady got divorced and walked away from it. And now he has the property all over again and ready to sell. So it's worked out for him. But in terms of scaling up, I sought people out. I knew that I was in a pond, a good pond. However, if I wanted to go in bigger and better projects, I needed to get in proximity of the people who do that. So the way I started was joined a mastermind with a commercial lender and who changed my mindset. I went Dave Ramsey, started saving pennies again because if you want to be a lender, you got to have money. So I started doing that, to hoarding money, so to speak, going into the savings mode to try to build up my reserves. And then really, like I said, back to the mentors, getting the mastermind and the office building that I work in during my 9 to 5, found the owner, great guy. He's retired and he only wants to be a lender now. He's done all of his development. He's done everything and he just wants to sit back and do lending. So I have lunch with him periodically and it's great advice. I'll ask a question, all questions are stupid and all questions are great. I'll ask him something, say, well, why do you want to do that? Well, because of this. Well, why don't you do it this way? And so by having these meetings and these masterminds, I'm slowly but surely coming into, getting that closer and closer to being accredited to where I can get into the bigger and better deals.
Very interesting. That's a very interesting progression. And I can definitely see where some of those relationships could have future potential for you as well, potentially to collaborate on some projects with other lenders. One of the things that we see, even in the world of banking, we're in discussions with a commercial bank, and the bank has a lending limit, and our project's larger than the lending limit, but they're willing to pull 2 or 3 other banks into the project as a consortium to do the project that way. And I think in the world of private lending, you can probably do the same thing.
What I like about private lending is it's truly creative financing. I've been I haven't done it myself, but I've been the lender for a property that was seller financed, in which motorcycles and boats were swapped and pawned and sold. And I mean, there's no limit. It's not just, okay, here's your Fannie, mortgage, your FHA mortgage, or your conventional. It's when you're in the private realm. And of course, now this is non-owner occupant. These are, investment loans, business loans, not loaning to a mortgage to someone to live in the house. You have a lot more leeway in terms of what you can do. And, if let's say I'm a bass fisherman and, and I have an eye on that bass boat, I might give a concession to make the deal happen just so I can get the bass boat. I might shave points. I might reduce interest rate, or maybe go from a monthly to a quarterly payment. There's a whole world of variables that you can negotiate in the private lending world. And I really like that.
That's fascinating. One of the things that we often hear about in the world of private lending is the geographic radius. Some lenders only, let's say, lend within a 50-mile radius of where they live. It's a kind of almost a cottage industry where it's got to fit within that circle. And yet I've talked to other lenders that will lend nationwide, where my gut says, boy, you've got to have really strong due diligence teams and very strong systems in order to do that effectively and manage the risk. What's been your philosophy?
Both. Start small, start in my backyard. I'm a visual learner. I'm always hands-on. Sitting in class, learning never really clicked for me. But if I was doing the work, I always understood almost intuitively. So when I started real estate and started lending, the old adage, real estate's local. So I started in my backyard and only would loan in the Houston area within 30 to 60 minutes from my house. As I became more and more comfortable, like you said, having that team to do your due diligence is crucial. And so you've got to have, and let's go extreme. Since I'm in the middle South, let's go to the extreme markets of the U.S., East Coast, West Coast. It can be done, but you do need to have boots on the ground, someone who understands the macro and the micro factors that are, affecting, where, for example, Amazon, right? Where's that whole thing about where they're going to put their corporate headquarters. We saw it here in Houston with Exxon. They built this tremendously huge campus in Spring, just north of Houston, and you should have seen the wholesale deals flying. I say advertised wholesale deals. Whether or not they were deals is yet to be determined, but there was a lot of activity that was going on. So I always impress on people, start small, start local. If you're not comfortable loaning, make sure you can see it, touch it, taste it, and smell it. If the dog died in the house, you want go smell it. I know it's a horrible thing to say, but immerse yourself locally. Then as your network, you build your network, you can branch your wings a little bit, right? So I would go from, say, Houston to Dallas, right? Or maybe into Kansas City or Chicago. No, Chicago's a very bad example, but geographically I'd space out. And that's one of the things that I am looking to do is I have befriended an investor in the Carolinas who is quite successful. He's got the track record and he's a known entity. So I'm going to go with him first rather than my neighbor whose cousin happened to find a deal, down the street. That's how I plan to branch out. And, with the advent of crowdfunding, and it's very passive. It's not as involved as private lending, but it can be anywhere, U.S., Canada, Mexico, vacation spots, et cetera, et cetera. So it's just I guess that's a long way of saying get comfortable in your backyard and then start branching out little by little.
Well, Keith, if someone wants to get in touch with you, what's the best way?
I'm at privatelenderpodcast.com, and you can email me at keith@privatelenderpodcast.com. And the podcast is iTunes, Stitcher, SoundCloud, wherever most those platforms are. You can find me there as well.
Well, Keith, great to catch up with you again. And will I see you next year at Podcast Movement Conference?
I'm thinking about it. Yeah, I was going to do a virtual, but I had so much fun at this last one. I think I'm going to be. I'll see you in Orlando.
Well, great to talk to you again, Keith. And for the listeners at home, check out Keith at the Private Lender Podcast. And in the meantime, have a great rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.